Hello, everybody. Welcome back to the Link platform. Oh my goodness, we are so excited to have you back on our channel today as we continue to delve into our personal finance journey. The topic for today, as you have seen, is investing in bonds. What really inspired this topic for us today is a question we've had for a while, which is how do we, as individual investors, capitalize on these very high interest rates? To find out more, keep watching. As we've indicated in the introduction, interest rates are really high. This is following one of the most aggressive interest rate hiking cycles we have ever seen from the start. We all know about the impact that the high interest rates are currently having on our loan installments. To offset that, we at the Link are thinking about locking in these high interest rates in the form of investment returns. To achieve this, we are going to be investing in bonds. There are different ways of getting exposure to bonds as an individual investor. You can make use of bond ETFs, which are available on Satrix, ETFs, or any other share trading platform that you use. These ETFs generally combine a few different bonds since they usually track a particular index. These ETFs may not necessarily be the most ideal way for an individual investor who wants to buy and hold bonds to maturity to get exposure to bonds. The Reserve Bank has provided an alternative that may actually be more suitable for buy and hold investors. We can now invest directly in South African government bonds through the RSA Retail Savings Bonds platform. Given the high interest rates, we think that it is the best time to be a buy and hold investor in SA government bonds. We will include the link to the website in the description below. There are actually a few differences between ETFs or listed bonds and retail savings bonds that we want to go into. Listed bonds are generally traded on the secondary market. Because of that, you don't necessarily need to buy them when they are initially issued, and you don't need to hold them until maturity. This offers flexibility. This flexibility, however, comes with some level of complexity. Because these bonds are actively traded in the secondary market, their value is impacted by changes in interest rates and changes in different market dynamics like demand and supply. This will affect the return that you can ultimately earn on the bonds. For simplicity, you can say that the bonds will behave in a similar way that you see equities behaving on easy equities. For example, now that you can earn 11% interest on 5-year fixed rate bonds on retail savings bond platform, if you compare your listed bond ETF to this, you will be able to earn a return that might be higher or lower than this 11% interest level because of these different market dynamics that affect ETFs. If you are not a professional bond investor or you simply don't have time to do research on bonds, you can just simply invest in retail savings bonds. You will know upfront what the return is going to be on these bonds, since you will essentially be locking in these high interest rates. The best part about retail savings bonds is that there are no fees attached to them. Of course, this comes with the fact that retail savings bonds don't offer as much flexibility as listed bonds or ETFs. You will have to invest until maturity to earn the interest that was promised. The other thing is that savings bonds can't be sold, and if you do choose to redeem them before maturity, you will incur penalties. Now that we have narrowed down the differences, let's look at retail savings bonds in more detail. Any individual who is a South African citizen or resident with a valid identity number and a South African bank account can invest in an RSA retail savings bond. There are three main categories of bonds available on the RSA Retail Savings Bonds platform. These are inflation-linked bonds, fixed-rate bonds, and top-up bonds. All of these have different rates attached to them. The inflation-linked bonds offer real interest rates and inflation protection. Capital amounts invested are adjusted for inflation on a semi-annual basis over the term of the investment. An index is used to determine how inflation has changed over the term of your investment to determine this adjustment. A fixed interest rate is then charged on the adjusted capital amount. This is the real interest rate as at the beginning of your investment. Interest earned on inflation-linked bonds will be paid out to your bank account. The minimum investment is 1,000 rands for these bonds. We will demonstrate in a later video how inflation-linked bonds returns are calculated so that you have an idea of how this interest is going to be determined if you choose to invest in inflation-linked bonds. Fixed-rate bonds work the same as normal fixed deposit accounts. The only difference is that these bonds offer higher interest rates compared to a typical fixed deposit account. The fixed-rate bonds pay a fixed rate throughout the bond term. Unlike inflation-linked bonds, these offer fixed returns and do not have the inflation protection mechanism. The minimum investment on fixed-rate bonds is also 1,000 rands. You can elect to capitalize the interest on these bonds. We actually highly recommend that you capitalize the interest if you opt for fixed-rate bonds. This will enable you to earn interest on interest earned in the previous period. You will then see the true power of compounding in your returns. You can still elect for interest to be paid out to your bank account if you prefer not to capitalize it. At the time of recording, we noted that inflation is actually starting to moderate. We therefore highly recommend that you invest in fixed-rate bonds. You will lock in this high level of interest rates, and it will not reduce with moderating inflation, which means you will earn higher real interest rates. The top-up bonds also offer fixed interest rates and are very similar to fixed-rate bonds. The only difference is that they have slightly lower interest rates and allow monthly top-ups. They also allow lower capital investments to begin with, since the minimum investment is just 500 rand, after which you can actually top up with as little as 100 rand. The top-up bonds automatically reinvest the interest earned. There is no option for the interest to be paid out into your bank account on top-up bonds. The top-up bond is the more affordable and more flexible of the three bonds on offer. For all three types of RSA retail savings bonds, the capital and interest will be paid into your bank account at the end of your investment term. Before your investment matures, you can opt to extend the term of your investment, but you will need to notify them well in advance. This brings us to the end of our video. Thank you for watching. If you've made it to the end of the video and are keen to learn more about retail savings bonds, please write your questions in the comment section below. We will do a follow-up video for more details on bonds, so please turn on your notifications so that you can be alerted when we post a new video. As always, whatever you do this week, put your best foot forward. Thank you for watching. Bye.